with Rohit Srivastava. He's the founder and strategist at indiacharts.com. Rohit, hi. Thanks so much for making time speaking with ET now. Well, it looked like we are headed to 20,000, but looks like we've hit a bit of a break as far as the last 1 to 2 hours is concerned. Do you still believe that rally to 20,000 is intact and likely to happen in September itself?
Yes, that remains my view. I think in the short term intraday, we're just going to be watching 19,530. What is important about 19,530 is not just the 20-hour average, but also if we take the last two highs from where the market sold off and draw a trend line, that support also comes in at around 19,530. So that's sort of a breakout point that will get retested between 19,530, 520. And I think once you do that, we should see the upward trend really resume. That's right, 20,000 remains on the cards. One reason to consider September to actually end up being a good month is August was weaker than normal. So a lot of people are trying to look at seasonality. But what you also need to see when seasonal trends break, then it can change for a couple of months. And so we saw that change in August. August is usually flattish, but it ended up being a deep cut. Similarly, September ends up being very volatile to negative, and it can actually end up being positive is how I'm really thinking about this. And the only, I think, last bit, I think, of fear that people might have or are, making a lot of noise about today is the outperformance of mid and small cap stocks, and are they really overdone? Now, I don't think if the large caps start catching up, which is what we really see with the Nifty, that you will see the broad market immediately cool off. They may appear overbought on classical, technical indicators like, the RSI or, something like that. Like RSI, I think, is the key one that is really showing high readings. If you look at both daily and weekly charts, the small cap index has like an 86 reading. On the daily chart, it can appear high. But, in extended moves, these readings can remain there for a prolonged period of time. So I'll give it a while. I do think there is a need for some kind of a pullback, but it may not happen immediately. So I think I'll push it forward till the large caps really catch up. And in the process, as we watch Nifty, what we ought to do is also look at major stocks like, for example, Reliance Industries that needs to really participate and get this momentum going. It's been a dog so far. It's trailing at around 2,400. 2,400 is also the point at which it had broken out from its 1-year falling channel. And we are watching very closely whether that support holds, because once the momentum there picks up, then we'll actually get further addition to the index pretty quickly. So that's, I think, those are the things to watch out for.
Okay, that's the view coming in there. But Rohit, this is Vinny joining in the conversation as well. I want to also talk just about those railway stocks. What a run up and what a rally that they've already seen coming in. Now, today, when you look at it, whether an RVNL, IRFC, not much of an exciting move. We are seeing a bit of a downtick coming in there. So, what is your view on the railway stocks? Is it done, or do you think there's still a run up left, and maybe now, further rally is expected here?
So there's always the short term and then there's the long term, right? When we look at each of these themes, specifically the PSU stocks as a whole, where the railway stocks come in, they have run up a lot in the short term. There is no doubt about that. Will that really change the long term theme in favor of that sector? Probably not. But definitely in the short term, if I'm thinking of making an entry in any of these stocks, I would not be comfortable doing so now as an investor, right? So I would like to see them consolidate, pull back somewhat, show that yes, they have the strength to hold on to maybe some of the moving averages in the short to medium term. Once that happens, then there would be comfort to really start building positions and trading the upside again in that sector. So surely long term, I don't see a problem, but shorter term, I would be a little risk averse to taking those trades or making fresh entries.
Which are the pockets that you're still okay to make fresh entries? Are they likely going to be in the large caps only, the likes of HDFC Bank or Reliance, which haven't run up? Or there are other pockets as well, like Power, which are still showing momentum?
Yeah, so on a 1 month basis, I think the case is like if you're talking about Nifty catching up with the mid caps and small caps, which is what I'm thinking, then I do need, the stocks that are not been participating. We spoke of Reliance, whether it's Tata Power, whether it's all these stocks in different sectors to, start moving. I've actually seen some of it. But unfortunately, not all sectors have a high weightage in the index. For example, you've seen metals start to participate. Even though there's so much fear around the rising dollar, the metal index has actually been one of the top performers of the last week. And that's a sign of change, because in the last quarter you would have actually seen metals underperform. So you look for things like that happening, because after all, let's accept that this is a bull market. This is not a bubble. And if it is a bull market, what it means is that every sector at some point of time is going to participate. There may be rotation. So that means there can be phases where one sector does better than the other. But eventually everything is going to participate. So we can't really be too negative about any particular sector.
Right. Rohit, any specific views that you have, especially on the QSR names? Look at Devyani International, that has done quite well. Jubilant Foodwork, what a run-up that they've seen in the recent times as well. And now you're seeing that catch-up is actually coming in on the discretionary side, even from something like a United Spirits, Global Spirits, the alcohol beverage companies. What's your view on this space?
Nothing unusual. Though I do have this view that when you think about defensive sectors, they do tend to do a little less well than the cyclicals during a phase like this, where you have a capex cycle and a manufacturing cycle kicking in. So therefore, your preference ends up shifting towards those sectors. It doesn't. So like I said, bull market, everything's going to participate. But then if we start asking questions about what will do better than what, then we are all going to make our own choices based on what we like. But if you just look at the last cycle, which was 2002 and 2008, you actually had major MNCs and all in this particular area underperform for a long period of time. They participated to some extent. The domestic companies actually did better. So you can always find individual names that might do rather well, but overall as a sector, I would prefer to be in places where the action is.
Rohit, if I can just pry a bit more and poke you to tell me your high conviction idea right now, one or two stocks.
So in the very short term, what I'm really seeing is today you have the pharma index doing well. So I just ran a scan this morning. I should highlight, we don't really make recommendations, but I'll just highlight the stocks that show up in these scans. This is using our Strike software. We just looked for Dow trend reversals. Dow trend essentially means stocks that are starting to make higher highs and higher lows as of today. So this would be live. So when we do that, what we actually end up seeing is, out of the 6 stocks that showed up on my screen, 3 are actually pharma stocks, which included Alchem, DVs, and Zydus. So these were 3 that showed up. People would of course need to do additional work in terms of risk, reward, and entry, but that shows that the trend up in pharma looks like something that is starting off again after the recent correction, and probably has more way to go. So I think that's one sector focus one can really bring in.
So pharma remains a top pick. Alchem, Divi's, these are the stocks that you like. Thank you so much, Rohit, for joining us and talking to us about your market outlook. But quickly shifting focus to what's happening from